So, you want to know how a company goes from losing millions to making millions? Well, today we are diving deep into the financial story of 5Paisa. We're going to follow the money and see exactly how they pulled off this incredible turnaround, going from a startup that was just burning through cash to a legit profit-making powerhouse.
It really is the ultimate business puzzle, isn't it? How do you flip deep, deep losses into massive profits? I mean, was it just some brilliant strategy, a bit of luck, or maybe some aggressive cost cutting? The real story? Well, it's all right there in the data. So let's follow the numbers and decode the strategy behind 5Paisa's amazing comeback. All right, here's our game plan. We're going to start by decoding their finances, then jump back to their high-stakes beginning in 2018. From there, we'll look at the big turning point in 2020, and then the huge payoff in 2024. Finally, we'll wrap it all up with the key lessons from their journey from red to black.
Okay, first up, let's get into the numbers. Everything we're about to look at comes straight from the company's own financial reports. This isn't speculation. This is the story the numbers themselves are telling us.
To really get the full picture, we're zoning in on three key snapshots in time. 2018, which was the super risky beginning, 2020, the crucial turning point, and 2024, the big payoff. Think of each one as a chapter that unlocks a piece of this puzzle.
So let's rewind the clock to 2018. This was what you'd call 5Paisa's investment phase. Honestly, they were playing a high-risk, high-reward game. And as you're about to see, they were betting big.
So back in the first quarter of 2018, the company brought in about 91 million rupees in revenue. You know, a pretty decent start. But that's only half the story.
And here's where it gets wild. In that exact same period, their expenses were a staggering 165.6 million rupees. Get this, they were spending almost double what they were actually earning. So what's the bottom line? A net loss of over 56 million rupees in a single quarter. That is not just a little deficit. That's a company burning through cash like there's no tomorrow. Or was it all part of the plan?
Right. This is the big question. A loss that huge makes you wonder, was it just bad management or was there some kind of method to this madness? Let's break it down and see where all that money was actually going.
Okay, now this is fascinating. Check out this breakdown of their expenses. A massive 41%, that's over 37 million rupees, went into one thing: advertising. You add marketing and commission to that, and it's crystal clear they were obsessed with one thing: getting more customers.
So, you see, this wasn't some kind of accounting error. It was a high-stakes gamble. The strategy was brutally simple. Spend whatever it takes to get customers in the door and scale the business as fast as humanly possible, even if it meant losing a ton of money up front.
All right, let's fast forward a bit to 2020. This is where things start to get really interesting. This was the turning point where that huge bet they made started to show signs that it might actually pay off.
And you can see the progress right here on this chart. By the end of 2020, that quarterly loss had shrunk from over 56 million rupees all the way down to just under 18 million. That's a huge improvement. The gap between what they were earning and what they were spending was finally closing. The data was telling a totally new story. For the first time, revenue was actually growing faster than their costs. That massive bet on getting customers was working. It was creating a revenue stream that could finally start to cover their spending. The path to actually making a profit was no longer just some distant dream. You could see it taking shape in the numbers.
And that brings us to 2024, the payoff. This is the moment where that long-term vision and all that short-term pain finally came together in, well, a pretty spectacular way.
Wow, this table just says it all, doesn't it? Look at that revenue. It just exploded from 91 million to over 1 billion rupees. And yeah, expenses grew too, but they just couldn't keep up. The final result? That 56 million rupee loss completely flipped into a jaw-dropping 219 million rupee profit in just one quarter. This chart right here paints the whole picture in one powerful image, from deep in the red to soaring way up into the black. It's a total financial reinvention. But believe it or not, profitability is only one part of the story. There's another metric that shows just how incredibly strong this company became. But before we get to that, let's quickly talk about something called the debt-to-equity ratio.
Basically, all it does is show how much a company is relying on loans to run its business versus using its own money. A high number means more debt, which means more risk.
Now look at this. Back in 2018, their debt-to-equity ratio was 1.75, which means they were heavily leveraged, relying a lot on borrowing. By 2024, that ratio is zero. Zilch. They are completely debt-free. This is huge. It means they didn't just become profitable. They became financially rock solid.
So, after all that, what's the big secret? What's the takeaway from this incredible journey? Let's boil it all down into a few key lessons.
It really looks like their playbook had 4 key steps. First, invest like crazy. Pour money into growth and just accept those early losses. Second, scale. Grow your revenue so fast that your costs can't catch up. Third, profit. Turn that massive scale into real sustainable cash. And finally, solidify. Use that cash to wipe out all your debt and build a financial foundation that is basically unbreakable.
So what's the big lesson we can all take from this? First, that burning through cash can actually work, but only if you have a clear plan to eventually outgrow your spending. Second, growth by itself is useless if you don't have the discipline to turn it into actual profit. And finally, becoming debt-free isn't just a boring accounting detail. It's a massive power move that signals real, long-term strength to everyone.
5Paisa has really pulled off an incredible comeback, giving us all a masterclass in financial strategy. I mean, they fought their way from deep losses to being completely debt-free and profitable. But in the world of finance, the game never really ends. They've proven they can climb the mountain. The only question now is, can they stay there?